Good evening. Today we'll see source documents. Okay. So in the first unit we saw the realization concept, right? In realization concept means if the uh, transaction is realized, means we can consider the transaction business transaction. Okay, so for that we need some proof. Okay, so that may be any type of source document listed below. So source documents or the authentic evidence of financial transaction. Okay, so this document show its nature of transaction, and it shows the date of the transaction and the cost amount and the people involved in it. Okay, so this may be cash receipt, invoice, debit note, credit note, pay slip, salary bills, wage bills, and a check record slip. Okay. So first one is a cash receipt or voucher. Okay. So this is a document. It contains a date, amount, and details of the cash purchases and the cash sales or any other cash transaction. Okay. So here the business person will receive cash receipt for some purchasing. Okay, and they will issue cash receipt for selling some product, that is cash sales. This is an sample of cash voucher. So it contains the invoice type and the person's address, their code, and pay group, BIC code. So this all belongs to this particular concern called a TNPL. Okay, so this voucher may different from maybe differ from one business to another business. Okay, so here the voucher number will be there. Okay, so and the payment mode, and if it is check means the check code and the account details, everything should be here. And mainly it contains invoice number, due date, and invoice date, voucher number, voucher date. Okay, so this is how a sam this is a cash voucher. Okay, and next one is invoice. So invoice is used for some credit purchase. Okay, so and the credit sales. So that is cash means cash voucher. So invoice means on purchasing and sales. On credit means we will go for invoice. It also contains the same details like date, amount, and there we saw day cash purchase details. Here the details of credit purchase and credit sales. Okay, so that is the difference between voucher and invoice. So which is generally prepared by the seller, and we need three copies of invoice. One is to uh, given to the purchaser, another one is given to the goods sent along with the goods, and the third one is retained by the seller itself. Okay, so these three invoice are prepared in all types of business. The while sending with the goods, we can check the details using that invoice. This is a one type of invoice. Okay, so it contains supplier details and the bill details, shipping to, and the GST details, and then delivery ID and the what is the basic price and what is the complete detailed price. Okay, so each and every tax amounts, everything is splitted here and mentioned. Okay, and the total amount will be shown here, and the date and amount, and if is there any discount means we have to mention the percentage of discount. Okay, so this is the type of invoice. Okay, so the next one is debit note. A buyer may return the goods to the seller. Okay, so in various situations such as when goods are defect or damaged, or the goods do not meet the specification, then the buyer should return. Okay, so when goods are returned by the buyers, the buyer prepares a debit note and send it to the seller. So it contains the details such as a description of that particular good and the quality written. How much you maybe you delivered 100. Okay, only 10 products are damaged. Okay, so you need to return only the 10. So the quantity returned should be mentioned and their value. Okay, and two copies here, two copies of debit note created. One is to the seller, another one should be retained with the buyer. This debit note we can call it as debit memo. Okay. Next one is credit, and this is the form debit note. So here also we have to mention the tax details, GST serial number and everything, transaction date, and where to ship and what is the receipt detail, that is billing details, everything we have to mention in this debit note. Okay, next one is credit note. So this is the statement which is prepared by the seller who receives back from his customer the goods sold. Okay, so here also we need to produce two credit notes. It will contain the details of description of the goods and the quantity returned. Okay, so already said two copies there. One is to the buyer, another one is retained for the seller. Okay, so this credit note also known as credit memo. So the same type of credit note will be like this. Okay, so credit note and debit note will be similar. And pay in slip, when cash or check is deposited in bank, a form is to be filled. Okay, so that is pay in slip. So if you are going to put some cash or you are going to put some amount in a bank, means of cash or by means of a check. Okay, the bank will give one slip. Okay, that slip we call it as pay in slip. Okay, so you have to fill that slip. Okay, so you have to enter all the details like to which account you are putting money and their phone number and everything, and that is if it is a check means you should mention the check dates. If it is a cash means you have to mention the denomination of that amount. Okay, so after filling everything you have to give it to cash along with this pay and slip or check along with this pay and slip to the um, bank. One the bank duly stamped and signed means then customer will get the amount. Okay, so this is the pay in slip format. Next one is check is a negotiable instrument. Checkbook is issued by a bank. Okay, so if you are opening an account means the bank will give one checkbook also. Okay, so you have to maintain the checkbook. So by if you want to give cash to some person means you can write in a check and you can give as a check instead of taking money and give. Okay, so this check you have that is the person if you receive check means so you have to put convert into cash by using the previous one, like you have to enter it pay and slip in the bank and you can convert it into cash. Okay, so here by issuing a check, a bank is directed to pay a specific amount. Okay, so if you receive one check with some amount 10,000. Okay, then now if you receive that check means so you have to take a money using the check from the bank. Okay, so each checkbook has record slips and also you can maintain, so each record checkbook has nearly 10, 20 to 30 leaflets. Okay, so each leaflets if you are issuing means you have to mention in the front page. Okay, so it contains total that is a 20 to 30 listings, so you can mention it for future reference. Okay, so this will be a checkbook. Okay, so this is first front page. So here you have to enter the check number, the first check number and the date in favor of whom you are giving and the amount. Okay, so if the next check means you have to write here. Okay, so this is for future reference, you have to mention maintain this. So this is the actual checkbook. So this is all about source documents. So thank you so much.